The drones have gone quiet. The ceasefire is holding for now. And somewhere in Tehran, a man in clerical robes is staring at a bank account that used to hold billions and watching the number fall in real time. That is not a metaphor. That is not a talking point. That is the actual documented financial reality of what is happening inside Iran right now, and almost nobody in mainstream American media is covering it with the seriousness it demands. So here it is, the financial collapse of the Iranian regime, the war that doesn't make the front page. The one being fought not with missiles or drones, but on spreadsheets, in currency markets, in the lines outside banks, where ordinary Iranians are discovering that their life savings are worth less than the paper they're printed on. While Washington debates military strategy and cable news, obsesses over the nuclear talks, the most decisive battle of this entire conflict is playing out in the Iranian economy, and it is a battle the regime is losing. This is Iran's financial collapse, and you need to understand every dimension of it. Before we go any further, if you care about the stories that actually matter, the ones that shape what comes next, subscribe to this channel right now and hit the notification bell, because this is exactly the kind of reporting that gets buried under the noise, and you deserve to see it clearly. Let's start where this story actually begins. Not in February 2026, when the US-Israeli strikes hit Iranian nuclear and military infrastructure, not with the blockade, not with the negotiations. Let's start several years before any of that, because the single most important thing you need to understand about Iran's economic collapse is this: the war didn't cause it. The war accelerated a collapse that was already well underway. By the time the first bomb fell in 2026, Iran's economy wasn't a functioning system under pressure. It was a burning structure with no exits, and someone had just thrown a match into the center of it. Here is what the numbers actually look like heading into this conflict. Iran's oil exports, the lifeblood of the entire government's revenue base, had been ground down to approximately 1.5 million barrels per day by 2025. That sounds like a lot until you understand that before the Trump administration's maximum pressure campaign began in 2018, Iran was exporting more than double that. More than half of the country's primary revenue source had been systematically strangled over the course of several years, and nothing meaningful had replaced it. The economy had not diversified. The institutions had not modernized. The government had not reformed. It had simply borrowed against the future, printed money to cover the gaps, and hoped that the international situation would shift in its favor before the structural rot became visible to everyone. It didn't shift, and the rot became visible. By March 2025, the Iranian rial had passed 1 million to the US dollar. Let that land for a moment. 1 million units of your currency to buy a single American dollar. Wikipedia's own documentation of the Iranian economic crisis confirms this threshold was crossed, and it wasn't a temporary spike driven by market panic. It was the endpoint of years of compounding monetary collapse. By December 2025, the rial had deteriorated further to 1.75 million per dollar. Time magazine, Euronews, and Al Monitor were all reporting at that point that Iran was approaching total economic collapse. The finance minister was publicly attributing the crisis to the 12-day war against Israel that summer. Not to 40 years of ideological governance that prioritized loyalty networks over economic institutions. Not to the decision to fund Hezbollah at $700 million a year while Iranian hospitals ran short on antibiotics. The 12-day war. That is the story the regime was telling its own people about why they couldn't afford to eat. The IMF's World Economic Outlook, reported by CNBC in April 2026, projected Iran's economy would contract by 6.1% this year alone, with inflation running at 68.9% annually. Average Iranian incomes had collapsed to roughly $200 per month by late 2025. Annual food inflation hit 64% by October of last year, then accelerated to 105% by February 2026. The government's response to this spiral was to issue its largest ever currency denomination, a 10 million rial note. Think about what that represents. A decade ago, a 10 million rial note would have purchased approximately $250 worth of goods and services. Today, that same note buys you less than $8. The central bank wasn't managing a currency, it was printing wallpaper and calling it money. And against this backdrop, this baseline of genuine economic catastrophe that existed before a single American bomb fell on Iranian soil, the National Council of Resistance of Iran reported that by late April 2026, a single tray of eggs in Tehran was selling for approximately 600,000 tomans, around 20,000 tomans per egg. A kilogram of packaged sugar that cost 95,000 tomans in late March had jumped to 125,000 tomans just weeks later. Families in Tehran and across Iran's major cities were making calculations that no family in any country should ever have to make, whether to sell the last of their savings or buy food for their children. And the government's answer to this, reported by Iran International, was to allow citizens to purchase essentials on credit, backed against future subsidy payments. Tehran was mortgaging tomorrow's welfare checks just to keep the grocery shelves stocked today. This was the foundation on which the war's economic pressure then descended. Not a cushion, not a reserve, a foundation that was already cracking, already failing, already collapsing from beneath millions of ordinary people who had done nothing wrong except be born inside a system that was designed to extract from them rather than serve them. Now let's go into the banking sector, because this is where the story becomes truly structural, where you can see exactly how the choices made by Iran's clerical leadership over decades have created a financial system that cannot be repaired quickly, that cannot be rescued by a ceasefire, and that reflects not bad luck or external pressure, but deliberate, calculated decisions to protect insider wealth at the expense of institutional integrity. Banks are not abstract. Banks are the circulatory system of an economy. When they function, credit flows, businesses plan, workers get paid, commerce happens. When they fail, everything seizes up simultaneously, and the failure doesn't stay in one sector. It spreads through every artery of economic life at once. Iran's banking system has been unhealthy for a long time. But no single episode illustrates the depth of that rot more clearly than the collapse of Bank Hyundai. In late 2025, one of Iran's major private lenders, an institution that ordinary Iranians trusted with their savings, was shut down. Its deposits and debts totaling approximately 2.5 quadrillion rials, roughly $5 billion at prevailing exchange rates, were transferred to Bank Melli, the country's largest state-owned institution. On the surface, this sounds like a government rescue operation, a safety net catching a fallen institution. Look closer and you see something very different. You see a warning flare being fired into the sky and a government responding by pointing a telescope in the opposite direction. Here is why Bank Hyundai collapsed. The bank had become a textbook example of what financial analysts call insider lending, the practice of channeling depositor money into politically connected projects that were never designed to generate genuine returns. It poured billions into prestige ventures, most notably the development of Iran Mall in Tehran, marketed at one point as the largest shopping mall in the world. Let me paint you a picture of what that represents. Borrowed money from ordinary Iranian depositors channeled into a monument to consumer ambition, built in a sanctioned economy where consumer spending was collapsing in real time, where the currency was in free fall, and where the primary qualification for receiving the investment wasn't a viable business plan, but political connection to the right people. To attract the deposits it needed to keep this structure running, Hyundai was offering interest rates above official regulatory limits, a classic Ponzi dynamic where the institution continuously requires new money flowing in to service the obligations it has already accumulated. By the time it collapsed, its liabilities had grown to a scale that made it one of the largest financial failures in Iranian history, and the regime's response was not accountability. It was not restructuring. It was not the imposition of losses on the creditors and shareholders who should bear them, which is the standard international approach to bank failure, the approach that actually preserves long-term institutional credibility. The regime simply moved the losses. It transferred them to Bank Melli, spreading the rot to the institution the entire country depends on, while creating the cosmetic appearance that everything was being handled. The losses didn't disappear, they migrated. And covering them required the central bank to print money, which fed directly into the inflation already running above 45% at that time, which drove the rial down further, which raised prices further, which drove more Iranians deeper into poverty. And Hyundai is not an isolated case. Multiple other major institutions, Sepah, Melat, Day and Iran Zamin, are carrying balance sheets bloated with non-performing loans to state enterprises and politically connected borrowers who have never been held to account for a single bad decision. Sepah is particularly notable because of its structural ties to the IRGC. This is not simply a commercial lender, it is an operational node in the Revolutionary Guard's financial architecture. If an institution with those connections falters, and the Council on Foreign Relations noted in its January 2026 assessment that the strain is real, the damage does not stay within the financial sector. It propagates directly into the security apparatus, the very apparatus the regime depends on to maintain physical control over the population. This is the vicious cycle at the core of this story. Weak banks stop lending, businesses lose credit and cut production, supply tightens while demand stays constant, so prices rise, jobs disappear, savings erode. Citizens rationally decide to pull their money from bank accounts and move it into dollars, gold, or informal markets. Individually sensible decisions that collectively accelerate exactly the collapse everyone is trying to escape. The regime created this system. It chose to protect politically connected insiders over depositor confidence. It chose prestige projects over sound lending. It chose to paper over failures rather than address them. And now it is watching the full structural consequences of those choices unfold, with almost no tools remaining to manage them. Here is where the story moves from painful to genuinely enraging, because while ordinary Iranians were standing in lines for subsidized bread, watching their savings dissolve, calculating whether they could afford eggs, a parallel economy was thriving, just not in Iran. A March 2026 investigation by the Times of London uncovered an overseas real estate portfolio linked to the Khamenei family valued at an estimated $138 million, including properties in London's Kensington neighbourhood acquired in 2014 and 2016. Let that register. The family of Iran's supreme leader, the man whose government was issuing 10 million rial notes to keep ATMs stocked, was holding prime London real estate while Iranian school teachers went unpaid. This is not an anomaly, it is a documented pattern. The children of the clerical and IRGC elite, Iranians call them the Azada, meaning the privileged ones, have built lavish lives in Western cities, London, Dubai, Toronto, Paris. Western cities that their fathers publicly denounce from pulpits and state television. Western lifestyles that the same men have banned inside Iran itself, where dress codes are enforced by morality police, where internet access is throttled, where protests are met with live ammunition. Kasra Arabi, who leads IRGC research at United Against Nuclear Iran, described the system with precise clarity. The Islamic regime is fundamentally corrupt. While regime clerics and IRGC leaders aggressively impose Islamic values on Iranian society, their offspring enjoy opulent lifestyles in Western cities, funded by illicit gains. The mechanics of how that money moved are documented in detail. A three-tiered pipeline, students and academics with IRGC connections acting as couriers of wealth, business figures with unexplained assets abroad, and regime insiders explicitly granted permission to transfer large sums overseas in exchange for maintaining the regime's financial networks. All of this, while the same system spent over $16 billion funding Hezbollah, Hamas, the Houthis, Iraqi militias, and the Assad regime in Syria. Hezbollah alone received close to $700 million per year. Hamas approximately $100 million. The Syrian intervention consumed billions in military aid, oil shipments, and credit lines across more than a decade. The Houthis received hundreds of millions to sustain their missile and drone programs that were lobbing weapons into international shipping lanes, while Iranian families were selling furniture to buy groceries. From the regime's perspective, this wasn't waste, it was investment. Those groups gave Iran regional power, negotiating leverage, and the ability to project strength even as the domestic economy rotted. Every dollar sent to Hezbollah was in the leadership's calculation, a dollar spent maintaining the Islamic Republic's weight in regional affairs, and by extension, justifying the clerics' claim to legitimate governance. If Iran was powerful abroad, the argument went, then the sacrifices at home were purposeful, not just the inevitable result of ideological rigidity and institutional corruption. But that calculation had a fatal flaw built into its foundation. It worked only as long as oil revenues were sufficient to simultaneously fund the proxy network and maintain a domestic economy stable enough to prevent revolution. Sanctions cut the oil revenues. The war finished the job. And now, as U.S. Treasury press releases confirm, American authorities have sanctioned Iranian officials, IRGC-linked financial networks, and for the first time, digital asset exchanges tied to Iranian oil money laundering operations. As Treasury Secretary Scott Bessent stated formally, rather than build a prosperous Iran, the regime has chosen to squander what remains of the nation's oil revenues on nuclear weapons development, missiles, and terrorist proxies around the world. The overseas financial architecture that protected clerical wealth is being dismantled, institution by institution, account by account. If you've been watching this channel and you value this kind of deep, documented, no-noise analysis, now is the time to subscribe and share this with someone who needs to understand what's actually happening in Iran. This is the story that shapes what comes next, and most people aren't hearing it clearly. Now let's talk about the IRGC, because this is where the financial collapse stops being abstract and starts directly threatening the physical mechanism by which the regime maintains power. Money has always been the backbone of clerical control, not ideology alone, not religious authority alone, but money, the ability to reward loyalists, pay the security forces that suppress protests, fund the soldiers who stand between the leadership and the streets, and cushion public anger with subsidies on food, fuel, and basic goods sold below market price. Remove the money, and the entire enforcement architecture begins to buckle under its own weight. The Washington Institute for Near East Policy published an analysis drawing on purported minutes from an internal IRGC commander meeting with Supreme Leader Khamenei that contains a detail so extraordinary it deserves to be stated twice. Rank-and-file IRGC soldiers, the shock troops of the regime's domestic repression apparatus, were being forced to take multiple jobs just to survive on their salaries. One commander allegedly complained that soldiers on border duty, facing daily threats from smugglers and armed groups, were being paid so little relative to the cost of living that two generals reported their own soldiers had been caught selling intelligence for cash. IRGC soldiers selling intelligence for money because their wages don't cover their families' living costs. The enforcers of the Islamic Republic, the men who beat protesters and guard nuclear facilities and run the financial networks that sustain the entire system, those men are personally experiencing the same economic desperation as the civilians they are tasked with controlling. When the security forces, whose loyalty the regime depends on, begin to make the same calculations as the population they are supposed to suppress, the coherence of the repressive system itself starts to fracture in ways that cannot be repaired by ideology alone. And it's against this backdrop that the IRGC's evolving political role has to be understood. Euronews reported in April 2026, drawing on assessments from the Institute for the Study of War, that the IRGC has effectively sidelined civilian leadership. Parliament Speaker Mohammed Bagher Ghalibaf and Foreign Minister Abbas Araghchi cannot make significant decisions without IRGC approval. IRGC Commander Ahmad Vahidi is reportedly making military and political decisions alongside the new Supreme Leader Mojtaba Khamenei. The structure is shifting from a clerical-dominated theocracy with military muscle to an IRGC-centric power architecture that happens to keep clerics in ceremonial roles. And the European Union, just days before the US-Israeli strikes began in February 2026, formally designated the IRGC as a terrorist organization, imposing asset freezes and financial restrictions across all member states. This is the regime the war is pressuring. Not a unified ideological structure with deep institutional coherence and genuine popular support. A fracturing system where civilian leaders cannot act without military approval, where security forces are personally experiencing the economic collapse they are supposed to be managing, and where the financial architecture that sustained the entire thing is being dismantled from the outside while rotting from within. Let's talk about the Iranian people, because they are not a backdrop to any of this. They are an active force whose patience, already tested far beyond anything reasonable, is reaching a breaking point that matters enormously for what comes next. The protests that swept all 31 of Iran's provinces beginning in late December 2025, documented by the House of Commons Library and extensively covered by Iran International, did not start because of the war. They started because the riel was collapsing and food had become unaffordable for ordinary families. Shopkeepers in Tehran's Grand Bazaar shuttered their stores. Students took to university campuses, workers marched in cities across the country, and then something happened that carries extraordinary historical significance. Protesters in Qom, the spiritual center of Iranian Shiism, the clerical stronghold, one of the most regime-loyal cities in the country, were openly chanting for the downfall of the theocracy. GIS reports documented demonstrators calling "Long live the Shah, long live the monarchy, no Lebanon, no Gaza, we shall sacrifice ourselves for Iran." Pro-monarchy slogans in Qom in the Islamic Republic. That is not a protest movement demanding reform within the system. That is a population demanding the replacement of the system itself. Iran International's analysis put it plainly. The protest reflected not just economic grievance, but a widespread belief that the future had narrowed, that there was no path forward within the existing structure that would deliver what ordinary Iranians needed and deserved. The regime's response was what the Council on Foreign Relations described as a bloody suppression of mass protests in early 2026. The EU's IRGC designation was partially a direct response to that crackdown. The US Treasury sanctioned Iranian officials specifically responsible for organizing the violence, including Interior Minister Eskandar Momeni Kaligari, whose security forces used live fire on demonstrators. Children were among the dead in Tehran province, according to Treasury's own designation documents. Children. And then the war started, and every condition that drove people into the streets in December got worse. More than 120,000 Iranian students are currently studying abroad, a number that has doubled in 4 years. Doctors, engineers, technology workers are leaving in record numbers. Over 4 million Iranians now live outside the country. Surveys show that 6 out of 10 university graduates dream of leaving. The regime is not just losing money, it is losing its future. The generation that should be starting businesses, building hospitals and rebuilding the country is building new lives in Europe, Canada and the Gulf.
And when the war ends and the reconstruction bill arrives, the government that will be responsible for delivering recovery, or failing to, is the same government that chose proxy militias over hospitals, printed money to cover insider lending losses, moved family wealth to Kensington while issuing 10 million rial notes to keep ATMs stocked, and used live ammunition on protesters who asked for nothing more than the ability to feed their children.
So here is the question, the one every serious analyst must eventually face. What actually happens when the money truly runs out? History doesn't give us comfortable answers. In Romania in December 1989, Nicolae Ceausescu's regime appeared stable from the outside, until the precise moment it didn't. The collapse came when the army refused to continue firing on civilians in Timișoara and Bucharest. Within days of that refusal, Ceausescu was arrested. Within a week, he was dead. The entire structure collapsed, not because the ideology failed, but because the instruments of enforcement stopped being reliable. In Libya in 2011, Muammar Gaddafi's control unraveled once the financial and military networks that bought tribal loyalty fractured under NATO pressure and oil field seizures. The proximate cause was external military intervention. The structural cause was that Gaddafi's system had become entirely dependent on continuous cash flows to maintain a loyalty architecture that had replaced genuine popular support. In both cases, the collapse did not come slowly and predictably. It came when the enforcement mechanism stopped working, when security forces looked at the protesters in the streets, looked at the order to fire, and made a different calculation. Iran is not Romania it is not Libya in 2011. The IRGC is larger, more internally coherent, and more economically embedded than Ceausescu's Etate or Gaddafi's tribal networks. The Washington Post's March 2026, reporting on U.S. intelligence assessments, concluded that despite withering airstrikes, the regime is consolidating power rather than collapsing, though in a form more hardline and more dependent on the IRGC than anything that existed before the war. GIS reports analysts correctly noted in January 2026 that several decisive elements for systemic change are still absent. No unifying opposition figure has emerged, no significant military defections have occurred, and demonstrations involve thousands rather than millions. But trajectories matter as much as current states, and the trajectory is unmistakably, structurally negative for the regime's financial foundations. Foreign reserves that once stood above $120 billion have fallen to somewhere between $20 and $30 billion, a collapse of more than 80%. Oil revenues that once covered 80% of government spending have been cut to a fraction of that figure. The money supply expansion of more than 40% in 2021 and subsequent years has fed an inflationary spiral the government cannot reverse without stopping money creation entirely, which would mean stopping the salary payments that keep the IRGC functional and the subsidy payments that keep the population from boiling over into full-scale revolution. Every tool the regime has left makes the underlying problem worse. Printing money buys short-term loyalty and long-term inflation. Cutting spending maintains currency stability and triggers immediate social unrest. There is no version of this where the math works. What the post-war period looks like depends on two deeply uncertain variables. First, the terms of any peace agreement, and specifically whether sanctions relief reaches the civilian economy, gets captured entirely by IRGC-controlled sectors that will use it to reconstitute military capacity rather than rebuild civilian lives. Second, whether the IRGC's grip on decision-making tightens to the point of completely displacing civilian governance, which most analysts, including the Institute for the Study of War, consider the most likely trajectory, or whether the economic pressure eventually creates fissures within the security apparatus itself, the kind of fissures that historical precedent suggests can accelerate collapse faster than any external military action. What is not uncertain is the baseline. The IMF projects 6.1% economic contraction in 2026, inflation at 68.9%, a currency trading at 1.32 million rials to the dollar and still falling, a banking system absorbing concealed losses it cannot fully disclose without triggering a run, a proxy network being defunded in real time as Hezbollah struggles to pay salaries, healthy drone stockpiles dwindle, and Iraqi militias withdraw from operations because the transfers from Tehran have stopped arriving. A diaspora of 4 million people who have already voted with their feet, and a domestic population that before this war even began, stood in the clerical stronghold of Qom and chanted for the end of the theocracy. The regime built its power on the clerics' ability to spend, to reward loyalists, fund repression, support regional allies, and cushion domestic unrest. That spending capacity is now structurally compromised in ways that a ceasefire alone cannot reverse. The blockade can be lifted, but a banking system weakened by decades of insider lending and politically motivated lost transfers does not repair itself in months. A currency that has lost 95% of its value against the dollar does not recover simply because oil starts flowing again. Investor confidence destroyed by 40 years of sanctions, arbitrary governance, and institutional corruption does not return overnight because a deal is signed in Geneva. And the $16 billion spent on regional proxies, that money did not build a single hospital, it did not repair a single water treatment facility, it did not fund a single school in the provinces that erupted in protest. It bought influence abroad and bought time at home, and the time it bought is now running out. The clerics did not govern Iran, they extracted it. They ran one of the world's most resource-rich nations as a patronage machine for insiders, while its citizens stood in lines for bread, and its best and brightest packed their degrees, their ambitions, and their futures, and left for places that would not shoot them for asking too many questions. When this war ends, the reckoning begins. Not the reckoning of missiles and drones, the quiet, grinding, structural reckoning of an economy with nothing left to hide its failures behind. The battlefield may go quiet, the financial collapse will continue to roar, and that collapse will test whether a regime that has survived sanctions, protests, assassinations, proxy wars, currency crises, and now a direct US-Israeli air campaign can survive the one thing it never adequately prepared for, running out of money. We will be watching every development, every economic data point, every bank that wobbles, every protest that sparks, every diplomatic signal that suggests whether post-war reconstruction is actually delivering relief to ordinary Iranians or being captured by the same system that destroyed the economy in the first place. If this is the analysis you want, rigorous, documented, no noise, subscribe right now, hit the notification bell and leave a comment below. Tell me, do you think the Iranian regime can survive the financial reckoning that comes after this war? Or is the economic collapse already too far advanced to reverse, regardless of what happens at the negotiating table? Every comment gets read, every perspective matters. Because understanding what comes next in Iran isn't just about one country, it's about the kind of world we're all going to be living in. Stay with us.